Hey, good morning. Let's trade some Forex. Let's trade Euro, US dollar, Canadian dollar, Australian dollar, Great British Pound, Japanese yen, Swiss franc. Look at some exotics if you want. Perhaps lira, perhaps peso, perhaps, I don't know. Let me know what's on your mind and we'll try to cover that. We'll also do gold and oil. What do you stink? Smell like a plan? Let's go! Buddy. Where you been? Boom, boom, boom. Good morning. How you doing, guys? Let's get that right. Isn't that better? Look. It's the economy. That's all. I had to look over there. So anyways, hey, good morning, everybody. How y'all doing? All y'all. My name is Wayne. Oh, I'm over here now. My name is Wayne. I'm a currency trader just like you. I've been doing this for a very long time. So ask questions and I will share my experiences with you with the overriding goal of helping you be a huge success. Need to thank Traders Way for being on our side. Oh, I'm going to put that back. There we go, huh? Thank you, Traders Way, for sponsoring the Forex.Today YouTube channel and making this plausible and possible. Can I check USD CAD? Okay. Yes, Cashin, I can do that. Make sure you like and subscribe and leave comments on the video recordings, okay? I hope the sound does not have static. I've moved all that for you. So without further ado, let's get going. Let me remind you, however, that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Brooke had a horrible September. Uh-oh, took a break, came back last week, planned CAD trades. Yeah, what did you... Well, you're just on the wrong side of the trade. You should make sure that you never put yourself in a situation where you have a horrible month. Okay? That's all. You should find a way. So, and even if you're just wrong, I always think of it this way. If I'm wrong, it's just my timing is off. Because my analysis tells me the direction. So if my timing's off, meaning the market's not ready, you know, that not a big deal. You just get a lot of small losers, lots of break-even type trades, and yeah, and it shouldn't lead to a disaster. Well, Brooke, when you go through times like that, you should stay with your friends and your family. You should stick with us. So maybe the biggest mistake was not losing money, but not being here when you needed us. So I'm glad you're here. The only thing to look at here on the yens right now is pound. Good morning, Jimmy. Okay. We're at the first point of entry, an AO, an area of opportunity. Oh, no, Brooke, told you. That's why you're supposed to be a docent, right? But of course, you don't need me to tell you that. So anyways, if you're looking to be a bull, this is all fairly legitimate, right? Now, you probably are hoping 132 is going to hold, and I would agree with you on that one. Okay. course, you can see long ago we have this marked out. So what is your technical plan? If you're a bull, you got to remind yourself, because you're probably talking yourself out of your plan. But remember, the plan last month was the double bottom. Okay? And it went from this pivot low to a pivot high, and is now simply retracing. Okay? That's all you have to remind yourself of. Okay? And you're using technical analysis and, of course, patience and discipline to A, stick with your strategy, and B, as you are going through this pullback period, not to suffer. You have to stay sort of focused, right? So like the beginning of the week had this potential, okay? And of course it failed on Monday. Doesn't mean you don't take it on Sunday. You should have been long on that, but again, you would have lost a little bit of money, not a lot of money. Now, the bearish target for that is down here. We know that, right? So doesn't that fit into our plan? Now, we don't know how NFP is going to be and all that kind of stuff. So now you need to start looking at like potential moves. Well, it could potentially do this next week is what this says. Right? You can see next week's setup, and we're on the central pivot. So even if it could go up from here, or it could drop down a little further to 131 and then go up. Okay? So we're in this, almost 80 pip range. But if you're a bull, you know in the next 80 pips, you're probably going to get an upward move. Now, if you didn't think you would probably get an upward move, then you're not a bull. Okay? You see how you filter that out? Okay? So you're thinking maybe here and maybe here. Cool. We basically did that a week or two ago. That was the trade plan. And that's how you keep yourself out of trouble. You have a trade plan for next week. So like next week's trade plan on this, if I were a bull, okay, would be long here or long down here, which is 30. So basically looking at this, I get long at 32 or I get long at 30. That gives me a lot of time to be patient. Of course, that's difficult, but you know, it could do this. It could take 2 weeks for this to turn around. Are you prepared to wait for a setup for 2 weeks? Most people are not. You know, when you hear about hedge fund managers and bankers and stuff, the ones that are managing big money for institutional clients, billions and billions and billions of dollars. These guys tend to have an Ivy League degree, right? And not just one, they have 2 or 3 Ivy League degrees. Okay? What does that tell you? That they're smarter? Well, it tells you that they have put in the time, right? But here's the thing. To get through all of that, you have to have patience, you have to have discipline, you have to have the tenacity to grind through the work and get it done and do it right, and compete, right? And I'm going through that process right now, and the ones that can't do it, they die, right? So it's weird, like if you haven't had the opportunity to get that, graduate level or PhD level Ivy League, okay? I can't even say just basic university. Ivy League, best in the world type school. If you don't have that, you still need to develop what it gives you. Okay, yes, it gives you an education. You do get somewhat smarter. But that's not what makes people success. Because I think, all right, so the professors at Harvard are, a little bit unique. But at the end of the day, if you got a textbook I don't know. I don't even know if it's a university, but let's say I decide to go to the University of Johannesburg. We have lots of friends from Johannesburg, right? So let's say I go to the University of Johannesburg. I don't know if there is one. There's probably University of something else, but let's call it the U of J. The textbook is probably the very same textbook, right? At Harvard, right? So you'll get a decent education, I'm sure. You'll get probably a good education. But what it adds up to, yeah, UJ? Cool. What it adds up to, though, what you're going to need, especially if you don't have the big degrees, is that you will have to have the tenacity of waiting 2 weeks for your trades to set up. And that's a grind. Sona, is it genuine? I don't know how to answer that question. Yes, they are genuine. It is genuine. It is genuine, yes. Cool. Okay, so I don't know. You have to have the ability to grind through this and say, this may take 2 weeks. And then I'll trade like a madman. But until then, I need to be patient. Like a dead man, I guess. So, I don't know. You got to be able to grind through that. And that's hard. Grind through doing nothing. But that's a difficult thing. Okay? But that's the big challenge, I think, of going through more and more and more and more school, especially as an adult or an executive where you're working too. There are 10,000 reasons to quit. Okay? There are 10,000 reasons to quit, and yet, if you graduate, like even my cohort, right? We started with 20, and there's only 9 people left. It's amazing, right? And of the people that applied, only 1% were accepted. So the best 20 out of 20,000. Anyways, so the success comes from the ability to just grind. Just grind, man. Don't be too smart, just grind. So if we're in this little area here, if it takes 2 weeks to set up, you will wait. Do I have an alarm? No, Tova. Nope. I watch my charts all day, every day. On my phone. But these are always running. I'm always watching the market. Okay. So anyways. So that's your pound yen. So maybe here, maybe there. So, right? It might go up this week here. It might go up this next week here. Or it might go up the third week somewhere, even maybe over there. But the rate of decline may slow and then eventually roll up. Okay. Another tool you could use in here, if you prefer, is your Fibonacci. Okay. Nothing seems to line up perfectly. It still says basically 132 to 130. So I don't know. Set it up, man. Set it up. I don't know when. I just know the probable prices. My job is to find both. Okay. You might want to look at congruency. These are still coming down, so this one is likely to still come down. Although, is the big speech done? Albert, I have trade plans. Right, so if I don't have a trade plan, there's nothing for me to do. If I see, like, was it USD CAD like yesterday? Like, there's a couple of big flips recently on some of these currency pairs. I think it was this one. I see it on my chart and I'm like, wow, look at that. Okay. But since I don't have a trade plan, besides the uniqueness of the move, it's irrelevant to me because I don't have a trade plan. I only get paid for the plans I produce. Think of it that way. So I look at this maybe as an athlete, right? I'm a golfer. I'm in the clubhouse. My round is done. And I'm watching Tiger Woods finish out his round. I'm watching it. I'm like, wow, hey, that was a good putt. But it doesn't affect me at all, right? I don't suddenly run out onto the green and try to make the putt too. You know, like this is just it's not my trade plan. It's not my shot. It's not my game. It's not me. It's an external event happening. But because I don't chase price, it's irrelevant. That's the big thing, Albert, right? Now, if I didn't have trade plans and I'm looking for volatility to tell me something to do, then this would be crazy. I'm like, oh my God, look at that. I got to start doing something, I guess, right? But I don't trade that way. I really don't, Albert. So there's no reason for me to intervene. Is that right, RC? Thank you. Yeah, we'd have to look at why CAD got so weak so fast. One of the things I was doing was comparing Canadian export data and balance of trade data with to the Australian balance of trade data. And Australia is in some serious trouble. Australia for quite some time has been a net importer. CAD is still exporting. Yeah, so the 0.0 GDP, well, I look at, annual and annualized, not quarterly and such. He says it has to do with oil and such. Yeah, I mean, all those correlations are pretty standard, right? Is it enough to explain? Is this enough to explain the quick move in oil? Well, we'll take a look. Is that really enough? I don't know. I think there's more going on here. Okay. We're at the target, by the way. So if you're a swing trader and you're swing trading oil, your entry was here on Sunday and your target was here, which we are now hitting. That was your week. Okay. Cool. All against the exogenous shock of that attack in Saudi Arabia. Pretty amazing. Okay. Cool. Still not quite the right price. Still not quite ready. Still doesn't feel quite right. Yeah, inventories, definitely a big deal. I think what that means is the summer driving season is over and we start to build up again. So like this morning when I woke up and went outside with a cup of coffee, the sun is rising over the lake and it's hot and humid and like steamy, like a jungle. My mother got 2 feet of snow yesterday. Mama! Ooh, ooh. Yeah, 2 feet of snow. It was hot this morning, man. It's been hot lately. About 2 nights ago or something, I was sitting outside reading and smoking a cigar, and it was dead silent except for the frogs and the geese, and every once in a while the cry of a blue heron or something, and dead still, like the air is dead still and heavy, and it's pitch black. I'm smoking my cigar, and it just felt like a weight. There's a little bit of humidity and hot. Okay, so Banda says, how does oil move in regards to risk on and risk off? So let me explain it instead of tell you. Okay. Crude oil. Is it a risk on or risk off play? All right. What creates a risk on mode? What creates a demand for risk? Not supply and demand. Nope. What creates risk? What creates demand for risk? What makes you want to take a risk, Tova? Fear? I will fight the giant. I am not afraid, says Tall Tom. No. Stability, not interest rate, guys. Flow of money in and out. That's a consequence. Bonds down, political. Confidence. Thank you, Prince Philip. Stability and confidence. Yep. Reward. Yep. But you guys, some of you guys have it completely backwards. I'm dumbfounded. We've covered it so many times. Thank you for asking the question again, guys. What makes you demand risk? Fear? No. Someone else said another one. Safety? No, that's the exact opposite. Oh my God. We could think of it like all right. We're going to play Russian roulette. There's $1 million. You choose, okay, there's a gun. It doesn't have any bullets at all. Do you want to play Russian roulette? If you don't die, you get the $1 million. Yeah. You're like, yeah, I'll play that game all day long. Psychologically, it'd be difficult to pull the trigger, though, wouldn't it? But yeah, but it's an empty gun. There's no risk. Boom! Let's go! Give me the $1 million. It's not cheap loans, guys. Me, almost 20 years. Okay, now the second thing is, what if there's 6 bullets in the chamber? That's risk. That's big risk, and you don't want that. Okay? So what makes you accept risk? Fear? No! Okay? You understand? No, you got it completely backwards. People put money on the line because they're certain they're going to make money. When they're not certain they're going to make money, aka when they're pretty sure they're going to lose money, they remove risk. You will take risk when you're certain you are going to get rewarded. You will remove risk when you're certain you will not be rewarded. In fact, you'll lose. Okay? So, what will make you invest in a business? Because you think it's going to lose money? No! Well, why do you invest into a business? Because you think it'll make money. Well, investing is a risk. What if they don't? What if you're wrong? What if they lose money and they can't pay you back? It's the same thing with loaning people money. Will you loan somebody money if you're pretty sure you're not going to get it back? No! So, when you loan somebody money, and you're certain you're going to get it back, then you'll loan someone money. Now, typically when you loan some money, unless it's friends or family or something, you add a little interest on there because you could have done something with your money. I mean, you can lend it to them for free, but you could have kept it in the bank and earned 1%, or you could have bought a bond and earned 2%. Dude, the stock market's up 19%. You hear how everyone cries every day? Dude, the stock market up in the United States was up 20%. But remember last October, there was a big decline. I'm like, stay calm. You can buy it. This is an opportunity to buy dips. You guys remember all that? I'm like, wow, I didn't see it coming down, but find something that you like. Remember all these conversations? I said, actually, have a list of companies you would like to buy but were too expensive, and then buy them on these declines. So if you had done that, and the stock market by January 1st went up 19% from January 1st, and you bought in October, dude, you're up like 30% in a year. So you're like, you could have, you can lend it to your friend for free, or you can put it in the bank and earn 1, or buy a bond, earn 2, or you could have put it in the stock market and got 20 to 30% in a year, right? So, demand for risk is when you're confident you're going to get paid. You're going to get a reward for that money. Okay? Cool. How do we know, or how do we determine our confidence in making an investment in a foreign market? When you make an investment, what do you do to get your confidence? Research. So, does your research tell you that there are lots of awesome opportunities out there to make you money? Or does your research tell you that finding awesome opportunities to make money are few and far between? It's not hypotheses. You have to do the research first. Okay? So you just look at economic data. Should you invest in Australia? Should you invest in New Zealand? Should you invest in China? Should you invest in Japan? Should you invest in Canada? Should you invest in the United States? Should you invest in South Africa? Should you invest in Turkey? Should you invest in Mexico? This is just economic data, and you do some research. Okay? If the economies are doing well and they're doing their jobs, whatever, each economy has their own job in the world market, then opportunities should be good and you'll invest. Okay? So, if you're looking at places like, let's say, China, and you'll say, oh, look at that. Everything looks good. The world is demanding products from China. China is making these products and sending them out around the world. So money's flowing to China. Products are leaving China. Everything seems really good. China seems to need resources or additional resources. So they might be importing things like iron ore and coal from Australia and all these different things because they're doing stuff. The economic activity looks really good. Well, one of the things China's going to need if everything is good and all the factories are just humming, they're going to need lots of things. Iron ore, coal, because if you put those things together, you make steel. But also the factories might need things like energy. Okay, you understand? And if it's not the factories, it's people driving in their cars. Or it's heating oil. Or it's plastic. There might be a huge demand for plastic if China's factories are humming. But what if they're quiet? What if they're only working one rotation instead of 3 rotations a day, right? The factory's only running 8 hours a day instead of 24 hours a day. What happens to the demand for oil and plastic and steel and copper? What happens to the demand for these things? the demand falls. So you simply look at WTI and you say, well, is this going to go up or down? And then you could say, well, my research based on China alone tells me that there's two choices here. There will soon be an increase in demand for energy, or there will not soon be an increase in demand for energy. Okay? If you think there will be an increase of demand for energy in the future, then you are looking for the opportunity to invest into oil. And it's your China play. Now, this isn't the only way to do it, okay? Right? It's not the only way to do it, but this is one way of thinking about it. So if you think the factories are going to increase capacity and utilization. So by the way, you can actually get Chinese manufacturing capacity and utilization data. That might be a good place to start. Okay? Right? Or balance of trade data. That's another good place to start. So if you say, well, in the near future, I think demand will increase, and you're thinking about investing into crude oil, in this case, WTI, that is a China play. That is an economic play. That's a macroeconomic play. And what you're saying is you're willing to make the investment. You're willing to take the risk. That is risk on. You're taking risk on. And what's the basis of that? The Chinese economy will improve in the near term. So you're willing to take the risk. Risk on. If you look at it and you say, the data's bad and it's only going to get worse, then there's no way in the world you're going to invest. There's just no way. You see 6 bullets in the chambers. You're like, I'm not playing that game no matter what the reward is. I think I'm going to lose. Cool. Then that's a risk off. You're taking your risk off the table. Remember, reward is a function of risk. Okay? If you put $1,000 on the table and I put $1 million on the table and we make the same bet and we're both right, I make more money. Why? Because I'm more right than you? No, we're equally right. The thing is, I took more risk. I get bigger reward. Maybe not proportionally, but that's how it goes, right? So risk on is because you're willing to risk to capture a reward. If you're certain you're not going to get the reward, you're not going to take the risk, okay? So to answer your question now, is WTI a risk on or risk off scenario? If I believe global macroeconomic activity is expanding, there should be a demand for all natural resources. But specifically WTI, okay? But you might have the same logic for copper, let's say. Okay? So I would be, if I was risk on because of positive macroeconomic activity in the near future, then I would be buying oil. Okay? Oil is the energy for economic activity of factories and of transportation and of plastics. And like, think of it, everything in Walmart is made out of crude oil. Everything in Walmart, even the food. And you say, what do you mean the food? Well, the fertilizer to grow the corn came from natural gas, which is a byproduct, let's say, of crude oil. So they crack the nat gas. They create fertilizer. It doesn't come from cow poo. They crack the nat gas. They make the fertilizer like phosphorus and nitrogen and stuff. And they put it in the ground to grow the grain, in this case corn. They grow the corn. They feed the corn to the cow. And then you ate the cow that you bought at Walmart. And yes, there's plastic. Well, there's WTI in that cow. So now, why is it down? Well, as you know, yesterday, oil inventories were reported to be up over 3 million barrels. Do inventories go up when there's customer demand, or do oil inventories go down when there's customer demand? Depends on the supply. No, I'm not bringing in supply. I'm asking a demand side question. When I ask a demand side question, then supply is constant. Okay? So, okay? So anyways, that doesn't look like risk on. But now you need to analyze the near future. It's not that it's down now, is what is it going to do next? Okay? So you should be asking yourself, as we approach $50 a barrel, are you going to buy it or not? Supply is generally constant unless there's an exogenous supply shock. Okay? That's correct. Demand means more oil is needed, or demanded, yeah, to be sent to factories for construction of product. Right. Little bummed out we went lower than that, 72. So this is the big move here. What do we want to do next? Okay. So this has got my attention. I think this is a very interesting pattern. Okay. And we're off the weekly and we're off the monthly, so this could get very interesting quite fast. Okay. This is a 1, 2, 3 pattern. Yeah, the fourth industrial revolution will extinct oil. Well, we won't use it the same. I think that energy will be free. The value of energy will be free. We'll use oil from other things, like we might make fertilizer from natural gas, for example. But I'd love to find a way to get rid of plastic in general, right? Like maybe we'll still make pipes out of PVC, which is a nylon material. We'll still do stuff like that, or that PEX Flex or whatever it's called. Like we'll have uses for plastic, but to put our water in it and put our kids' sandwiches in plastic and send them off to school and to have plastic in our clothes and that kind of stuff, no, I'd like to get rid of that. So yeah, I think there'll be uses for this natural resource, I mean, it's just carbon, will come up for use with the carbon and the other gases that surround the carbon. But to, you know, to power our cars, that makes no sense. To provide electricity for our homes, it makes no sense. It makes absolutely no sense. The amount of energy thrown onto our planet from the sun can more than satisfy absolutely everything. And so that's kind of the next wave. And when you look at cars, like sticking gasoline and oil into a car, it just doesn't make sense with our technological advancements. Right? It's just an electric car is just a better designed car. So yeah, we're definitely going that way. But that's not going to impact oil prices this week or next year. But it totally makes sense to go electric. I think we're going to get rid of the power grid. I've been saying that for years. Cars will be completely electric. Homes will be battery powered. All that kind of stuff. Well, yeah, the plastic waste is really what I'm talking about. So one of the things I've looked at investing into is a waste-to-energy power plant. And you can take the garbage. So actually what I want to do is I want to mine garbage dumps. And you just literally go in with bulldozers and you grab just a bulldozer full of garbage that may have been sitting in the ground for 50 years. And, you know, it's still, what's most of it? Plastic, right? So anyways, I'd like to burn it, okay, and create electricity from that process because you get the heat and all that. So you burn it. The output now, at the bottom comes pure liquid plastic that you can then make products out of. You're not creating new plastic, you're just pulling it out of the ground after decades and you're creating this pure plastic, which then you can make products out of. But then you capture the carbon as the smoke leaves and you have carbon nanotubes. So you actually are mining carbon, which is the most valuable, but then you're also mining plastic, right? So you get pure plastic and you can make things out of that plastic, you know, like artificial reefs or something. Okay. Yeah, but much more advanced than that, Heath. Much more advanced than that. And I'm going to deploy these, you know, around the world in smaller economies. But anyways, that's a side project of mine. Let's get off of that. Gold, I guess we should look at gold. Okay. So as you can see, we have all of this planned. We did this a couple of weeks ago, so you can see I'm slightly off a few pennies. But none of this should be a surprise. Remember, if you're trading and you're surprised, you certainly aren't trading your surprise. But if you're surprised, you're not planning far enough ahead. So like 2 or 3 weeks ago, we had this like, you know, at 1500 maybe it's a buy, or it drops to the next level at 1450, right? And of course, it came down and I mean, it bounced and it bounced at a weekly S2. Like none of it is that shocking if you've planned a week or two in advance. It's really shocking if you don't have a plan, right? So here's, you know, here's a rejection off resistance, and then here's the rejection off support. Cool. And now we're stuck in the middle, so now it's not that good to trade anymore. But if you're a bear, you're going to try to roll this over, right? That's what you're going to do if you're a bear. Bulls are going to try to buy the dip. And because it's kind of the same thing to me, it makes me neutral, okay? But you can see this was clearly supportive at a midpoint psych level. Basically 1455 is down here. 1450, right here. Cool, so now we're back up at 1500, great, fine. All right, but again, not a surprising level for it to bounce. So if you are expecting things like that to happen, you could put together trade plans, right? Cool. You see that? So 1455 or 1450-ish roll reversal that we identified, let's say 2 weeks ago. You understand that? Let's say you're expecting somewhere near that price, some sort of reversal pattern. This is very interesting, but this is definitely interesting, right? So what's the next play? Plan A, plan B. Not complicated at all. Now we're elevated, and I'm telling you, we're more neutral than anything, so it's harder to predict. Okay? But when the central pivot point is your entry, your low, what's the target? R2. That's actually in my book 13 years ago was when it was published. I wrote it 14 years ago. That's the pattern I teach. Okay? It's obvious. Now, and then if you do something like, oops, I don't want to get rid of that. Also, okay, that's a beauty. That's a beaut. Crikey! Okay? So in my book, I say, if you get a 3A2 Fibonacci retracement, then your extension is to the 1618, which is there. Can anybody confirm that? A 618 predicts a 13A2, a 3A2 predicts a 1618. Nice, right? Yeah, amazing coincidence. Amazing coincidence. Yeah, amazing. Cool. Yeah, bring out the flag pattern. How about the bat? Let's do a Gartley. The way I look at it, guys, is that going back a couple of weeks ago, we had said somewhere around this area here, it would probably go up. Forever? I don't know about forever. It's hard. There was a trend, but this is a lower low, so how do you deal with that? But it's not a shock, is all I'm saying, right? I drew it out for you for a couple of weeks, so if all you did was trade gold, I don't think you'd miss something like that. I mean, look, you had a whole day, well, 12 hours. You had 12 to 18. You had somewhere between 12 and 18 hours to set that trade up. Right? You understand? Joe says, hey, Wayne, I've heard you talk about it in the past, but do you think it's doable to only trade WTI? Yeah, I guess so. I don't know why you would only want to do that, but yeah. Okay. But, like, why not trade WTI and Brent? Or WTI, Brent, and CAD and Noki? And still say I'm an expert in trading energy. You could say, I trade European energy, I trade US energy, you know, I capture the Canadian dollar, I capture the Norwegian crown, right? The kroner, right? And stuff like that. But sure. And really, yeah, sure, absolutely. It makes total sense to me, actually. Okay, so I guess I should have a summary here. The summary is, I believe the value, the worth, is that we talked about this 2 weeks ago of being an important price for gold if you're a buyer. Everything else after that, it isn't really of that much value. They're tools you use to make an opinion, okay? So if you got rid of the moving averages, okay? Cool. If you get rid of the bands, cool. Now the pivots look so pretty, but you don't need them either. I like them, but you don't need them. The value here isn't necessarily learning the patterns. Although this, I think, is pretty obvious that something happened off of your price. And I think waiting, having the patience to get a decline, because remember yesterday's conversation of buying low? And if you know price action, right, you kind of know somewhere around here is your roll reversal. So it's not complicated. You're like, oh, right off my price. Great. So you got to wait an hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours, 8 hours, 9 hours, 10 hours, 11 hours, 12 hours, 13 hours, 14 hours, 15 hours, 16. So, you know, like I said, you had almost 18 hours, less than 18 hours. You had 15 hours. Okay? So don't get caught up on the fib levels. Irrelevant. I'm just showing you that there's other ways that you can skin this rabbit. Okay? But the thing is, the value is that 2 weeks ago, you were eyeballing this area and said, yeah, down here, I would be a buyer. Based on your analysis of the markets. You're a bull, great. And then you started looking at prices, and your analysis told you, again, a couple of weeks ago, that somewhere in here there's most likely to be a bounce. Okay? Okay? And what you looked at is that old area plus a psychological level, right? 1450. Okay? So somewhere around in here. So you know as you're approaching, you're waiting and you're waiting, you're waiting for it. And you don't know what the sign will be until you see it. And you're like, that's it! Ow. Cool. So now you're like, I'm going to buy the dip. I'm going to look at a roll reversal. I might fib it. You might fib it this way, not the other way. You might fib it this way, and you look at the roll reversal this way. This is all stuff I teach you all day, every day, over and over and over again. And you take your shot. So that's your value, guys. There's your setup. There's your shot. Okay? And all the other stuff that you might do is dangerous. Okay. And now we're in a zone where I think it's fairly neutral. Okay. So whether you made $50 an ounce or $25 an ounce is just based on your entry. But the analysis is the same. And I don't care if you use moving averages or MACDs or RSIs or stochastic oscillators or CCIs, whatever you use, right? I don't care. I don't care. It doesn't matter. That's not the value. So like trying to memorize and be mechanical about technical indicators is not the right focus. Okay. Right, Pro Trader. Yeah, it's a high risk, 50-50 chance, but I don't play that game, right? Right, Russian roulette. There's 6 chambers and 3 bullets. I don't like those odds. I don't want to play that game. Okay. So, what are you thinking about this one? Okay, and then there's this where we're on now. So let me draw a smaller time frame. Okay, is this your sign? I saw the sign. It opened up my eyes. I saw the sign. Yeah, I just went rock set on you. Oh, and you loved it too. You know it. Okay. Okay. What do you stink? It feels actually more like that. So let's do it this way. Do you have the discipline and the patience to wait? I don't know. Okay. You see it? Nice trade, RC. Okay. Help me out on this one. Correct me if I'm wrong. Yesterday's conversation, and I might be, so correct me if I'm wrong. Yesterday's conversation was in here, wasn't it? Or was it the lower one? It might have been the lower one. Was it the upper one or the lower one? We had this conversation. I said it was the dumbest place you could possibly buy it. I said I can't even fake it. I can't even think of it from a bullish point of view. Was it? Oh, is that right? I'm like, it is so dumb. I can't even counteract my opinion. Like, I cannot find even one nugget of why it would go up. Gross negligence. That's right. Prince Philip doesn't remember it. Cool. Okay. Nice. And I said it's not that you're buying it, but that's just the dumbest place you could possibly buy it. Cool. But if you wait for a retracement, maybe it gets better, right? Cool. Well, I'm very glad I was vindicated. Because, of course, I didn't know at that time. It's just like I couldn't be that bad. Cool. But maybe, right? Right? Maybe it was a good lesson, though, right? Yeah, well, it was James' first day, so maybe it rocked, right? Maybe it was an awesome first day. I don't know. You know, people have different personalities. I might have rubbed him the wrong way. But I think if he's honest with himself, it was a really good lesson, right? Like, I was clear as a coach, right? Jimmy Holiday. Good morning, sir. What a cool name. Yeah, all of that, sure. Yeah, you don't need it to go that far, but yeah, sure. Yeah, I made it clear, right? Cool. Bitcoin says the way I taught it or explained it, surely taught him something great. Yeah, or I'll never see him again. One of the two, right? So, but great. But you notice like little things like um, my personal confidence, my certainty, for example. Um, these are important as a trader, right? I'm not certain if it'll go up or not, but I'm certain that that's not a good price to buy. And if I was buyer, I have to buy low. Remember that? So do you think this is a legitimate buying low? Yeah, that's role reversal. That's nice. Okay. And I think the other thing we talked about is if I was going to buy it at this price, it would be on a breakout role reversal like it's done now, right? Right? And I think I even explained that. I'm like, it's not that I don't I don't like this price. I don't like this price here. But if it broke higher, I think I drew it like if it went to this, I want it to come back and then up, right? So anyways, so I hope it was a good lesson, right? I'm sure I got hundreds and hundreds of comments yesterday. 1,300 people probably watched the video. 700 people probably left a comment. I'll have to spend hours going through all 700 comments. It was such a good lesson. Can you hear my snarkiness? Sorry, Canadians are snarky. Cool. Nailed it. Kiwi Swissy, the double dip. It's still not very much though, compared to historic norms. Yeah. Yeah, Australia at an all-time low in interest rates. Pretty amazing. Look at this, like, pound CAD right now. If you want to do crosses. Nice, huh? It's not perfect. But here's another example of that 1, 2, 3, and we've seen a couple of those reversals lately now, right? That I've done them on, I'd say at least 2 currency pairs today. Right? I count that as a roll reversal. Right? So 1, double bottom. 2, higher high. And 3. Well, I like to do it as roll reversal. It's really a higher low, but I like the roll reversal idea. Okay. Okay. Thank you, Christian. Make sure you open an account at Trader's Way, huh? So it's just gone. There's nothing you can do about it now. That's why, like, someone was like, how do you not get all upset? I'm like, there's nothing I do about it. Like, why would I get upset? But great move, right? And do you see the value of having an index like that? I like to do the relative exercise myself, but this is, I guess, a quick and dirty way of doing it. Swissie's low, that's good, right? USD is low, that's good. So all that's really nice. Who doesn't like Singapore, Pro Trader? I really want to get back and see the new and updated raffles. Banda, it's a part of the new download. I'm about to release it, by the way. The new download for the indicators and stuff. You're gonna have to pay $5 now, though. So $5 gets you the standard setup. Okay. And then I created the what I call the advanced toolbox. And there are 2 options to download that. And that includes all the fun little things like this. That's in the advanced toolbox. That's like $50 for you'll see when I launch it. So the advanced toolbox is 12 other cool tools, like an indexer, for example. Right, so there are 12 more tools. Okay, you can download them all at once. Right, all 12. Or you can download them for $47 over the course of a year. Pretty reasonable. So that's for the advanced one. And then my standard chart setups that I use all day, every day, they're now $4.95. So you're going to have to buy me a triple grande soy latte, which I also think is quite fair. So I'm going to take any money that people invest into this, and then I'm going to have that created. I'm going to hire someone to do the MT5 version. So Albert, if you want to have that happen, you should just go ahead and sign up when I launch it. Okay. So I'm just going to take that money and say, you guys care. Then I'll give that money to a developer who will develop all the MT5 tools, and then I'll just upload them, and you'll have a choice: download MT4, download MT5. Done. Okay. But if nobody cares, see, I've done stuff like this in the past where people say they care, so I spend all the time and money, I get it developed, and then of course nobody cares. So in this case, if you care, you'll sign up. Cool. So anyways, yeah, let's go back to those Swissies. So again, the difference between one or the other is one is you download everything all at once, all 12 tools are available immediately, or one tool is released every month. Seems fair? And it's not a monthly fee, it's just flat, it's just you get it monthly or all at once. You choose. Pretty simple, pretty cool. Okay, let's go here. I like pound Swissy, but let's look at some other ones. Even Aussie Swissy, huh? You guys remember setting this up? Look at that. Even have it here. So it went up and then came back down. And then went back up and maybe it's trying to live. So let's see. Okay. Up, 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 down, down, buy. Up, 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 down, down, buy. Of course, you can do that here, here, and here, but up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 up. What do you think is going to happen next? Maybe down, down, buy, up, up, up. I don't know. Oh, Peter says I have to learn MT4. One of the things it says when you sign up for the $5 download is it says, hey man, do you need help learning MT4 or the MetaTrader platform? We have 11 videos that'll help you. It'll cost you, I can't remember, $9. I can't remember what it is. $9? Maybe it's $11. I don't know. I can't remember. It's super ridiculously affordable. I can't remember what it is. Do you want it for $11? Add it to your cart and it'll be unlocked in your members area. You know, like, it's like, it's so cheap, it's really funny, but it's one of these things where people that don't care cause so much problems compared to the ones that do care that I'd just rather people that don't actually care not download it and then send me 9,000 emails about stuff that, you know, they're not willing to pay $5 for. So anyways, it's a nice little screening process, right? Pay the $4.95. Oh, I'd rather do it myself. Then go do it yourself, right? Right. It'll take you 6 hours to do it yourself. Cool. So whatever. That's my thought. Anyways, most of you guys are on board, I know. So anyways, let me get that out of the way. All right. So anyways, we've set this up so many times and over so many different days. I think you'll be hot to go HOTTOGO, or you're just not interested. Ninja Trader's okay. TradingView, no. Professionals don't use TradingView. MT4 is fine. Yeah, that's what I thought, right, Peter? Like, I actually say that. There's a little introductory video I did the other day. And I'm like, look, you could totally do this yourself. You can go find either the same indicators or very, very similar indicators, and then you can test them and find the ones that work, and then you can put them on your chart, and then you can create all your templates and add the moving averages yourself, and add the pivot points yourself, and then adjust the MACD and all that kind of yourself. You can do it all yourself. And probably, you know, once you create one profile, you'll just make a dozen or so others. And, you know, yeah, you could probably do it if you know what you're doing. You could probably do it in 6 or 7 hours. But the thing is, your 7 hours might be worth more than $5, right? So just pay the $5, right? But whatever, right? You can do it. Just why would you, kind of thing. So that's why I priced it like that. It's so stupid. If you're not willing to buy someone a cup of coffee because they spent 15 years finding a combination of tools and templates that work, and you're not willing to buy them a cup of coffee, then forget about it, right? Like, just forget about it. All right. So it might be 6 hours that you're saving. It might be 10 years that you're saving. Either way, it's $5, dude. Kick down, come clean. Don't be a holdout machine. All right. So anyways, we're taking a look at this, and I'm forgetting the exact combo, so I got to scroll out a bit. Why did I put these ones here? I don't remember. Is it just some sort of support and resistance? I think so. But this was sort of another move, and I do believe we talked about the potential for a double top here as well, right? I kind of remember something like that. We have not made a lower low, although this may be compared to that. Yeah, so it's a little iffy, actually. It's very neutral because there's always, in a scenario like this, a chance for a top. And it did make a lower low. So now, if you're a bear and you set it up like this or like this, I get you. I get you. Okay, it's not that it's going to, but a bear would certainly do that. Okay. But if you're a bull, you're in okay, but you should at least be concerned, right? So another tool that I like to use to remind myself of what's happening, okay, I add the regression channel. So anyways, so it's still okay. Still okay. Now on a smaller time frame, like, so I would have entered from here, but from where we are now, it's not quite the same. So I got to be careful, right? So we'll see what happens when we're up here, but I've already drawn that for you. I'll do it again. Okay, that's the area of concern. I have Aussie, so like instead of Kiwi, but you, Jesus fan, you think Kiwi is going to be radically different? I did Aussie, but he wants Kiwi. I can't imagine. Why not? See, when you're a macro trader and you're aware of correlations and similarities between economies and stuff, that you see one and you can see 3 other trades, right? I look at one trade and see 3 other trades, kind of thing. But anyways, all right. So there's a relative strength difference. That's cool. Okay. It's off a weekly S1. No major pivot. So this is not a technical trade. Okay. So this looks like very much next week. So if you're going to try it, you know, after NFP, maybe we get something like that. Okay. Ali, that first of all, that's not the major importance. It's the next thing, and New Zealand's going to cut too, right? So there's no difference there. But like I said earlier today, before the webinar, I was comparing the balance of trade for Canada to the balance of trade in Australia, and there is a significant difference. In this case, you'd want to look at the balance of trade for New Zealand versus the balance of trade for Australia. Much more important than the interest rate differential. And nobody says, oh my God, right? That bank across the street pays a little bit more than this one, so I'm going to drain my account and I'm going to move all my money to that other bank. That's not the fundamental driver here. Okay, and by the way, it's never the interest rate now, it's future expected interest rates. Okay, so if Australia is less than New Zealand, but people were certain Australia was going to raise interest rates at the next meeting, the Aussie dollar would be destroying the Kiwi dollar. Even though the Kiwi pays higher, nobody cares about that. Okay, it's finance. Remember, this is finance. This is all about future cash flows. Well, Ali, money is sticky, is the terminology, right? So people generally don't switch cell phone carriers very often, for example, right? People generally don't switch credit cards very often unless they don't have any money at all, right? People are pretty sticky. And money is very sticky. Okay? Most people have had the same bank for decades. Okay? If you flip banks a lot and you flip credit cards a lot, you probably have financial problems. And your credit is probably terrible. Okay? And you're playing the game to survive, and that's totally different, right? But that's not normal. Now, if you've been in it your whole life, and by the way, I grew up poor. I get it, dude. Don't get all pissy on me. I'm not talking to anyone in general, but I'm just talking out loud. But I understand, right? But that it is abnormal. It can get to be normal if that's all you grew up with. Your aunties and your uncles and your neighbors and your friends and all that, and everyone has bad credit. You think, well, everyone has bad credit. No, it's not true. So anyways, most people have had banks and they don't flip banks, right? That kind of stuff. So money is very, very, very sticky. And this is why I say, like, when you see geopolitical risk on TV and everyone's like, oh my God, so is everything going to crash? And then I ask you, well, if you had $1 billion portfolio you spent the last 10 years building, are you going to dump it on this news? And you're like, no. Money is sticky. What do you think about repatriation? It's remittance, not repatriation. And what do I think about it now? Well, I talked about it twice this week and explained that, generally speaking, in times when the US dollar is strong, you should be quite cautious on the USD Mexican peso remittance trade. Right? And we are in a scenario where the dollar is generally strong. We know it's sometime in this week that this should come down if there is a remittance trade. And right now, here it is, the Thursday before non-farm payrolls, and at 10 o'clock, we got the big ISM service number coming out, right? So, what do I know about this? I don't know anything about this. All I know is 2.6 billion is going to move from here to here. And if the dollar happens to be weak as well at the same time, you'll get a big move. If the dollar happens to be strong when the 2.6 billion moves from the United States to Mexico, will that weaken the strong dollar? No. 2.6 billion is nothing. Okay? But if you get the right market conditions, like when global macroeconomics is up, the US dollar is weak, but that's also good for business for Mexico, so the peso is usually up. No, I mean, this is actually dollar going down. Oops. I'm thinking backwards here. I don't know if I just stuck my foot in my mouth. But anyways, when times are good, dollar is weak. And when times are good, peso is strong. And then, of course, they get inflation, so interest rates, so there's a carry. So interest rates are high here. And in those scenarios, the remittance is fuel to the fire. In the opposite scenario, when the dollar is strong because macroeconomics is bad, the peso tends to be weak. Okay? And this just is not enough to change things. Okay? Am I trading NFP? I am doing Trade Non-Farm Payrolls Live, a webinar now that I do at FX Street. I've been doing the webinar for 13 and a half years, rock dude. So if you want to catch that, fxstreet.com. Okay? 13 and a half years I've been doing that one webinar. And I've been doing training and education with FX Street for over 15 years, which is longer than your last guru has even had a trading career. Right? 132 years, Rock. Scout's honor. Yeah, long enough, Rocky. Long enough. All right, guys. I think I'm going to pull the plug, moveon.com. The ISM services is at 10. That's going to be a doozy. And then swing traders, we're going to meet at 11 o'clock. So if you're in my swing trading group, I will see you in about 90 minutes. Typically, I open up the room early and everyone logs in. Make sure you turn your microphone on and turn your camera on, and we'll have a good old time. And then we'll start right around 11 a.m. And we'll start hunting for trades that will give us 300 pips. Nice! Big dogs, huh? Big dogs. Ow! Going for the big pips. It's really hard to sift through all the people teaching Forex. Yeah, imagine. Now, the opposite was true for me. Like, nobody did Forex when I started. Nobody. It was weird. I couldn't find a book. I couldn't find a mentor. It was weird. Right? Like, I've been doing FX Street webinars for over 15 years. Right? I was a keynote speaker at the very first Forex Trading Expo. Like, it's weird. Like, being first, you're like, great. Right? You're like, who's the expert here? You are. What? Right? There's a scene in Saving Private Ryan, I think, when they storm the beach and they finally get to the sand dune with a little bit of protection. And they're like, who's in charge here? And they're like, you are, sir. You're like, really? Yeah, all the officers are dead. And you're like, oh, all right. So anyways, whatever. All right. Peace on, up here. Peace on earth. May the pips be with you. May your profits be above average. Swing traders, I'll see you in 90 minutes. Everyone else, I'll see you at FX Street tomorrow. And if you don't go to my Trade Non-Farm Payrolls Live event, then have a wonderful weekend. And I will see you Monday here at the Forex.Today YouTube channel. Take care of yourself, you hear? And goodbye.